All right, let's get back to a really important and big cable deal, consolidation coming to this sector. And Charter is at least the one public entity that we can watch the performance of course. Stock up modestly this morning. It's announced it will acquire the privately held Cox Communications. It's about a $34.5 billion deal. That does include about $12 billion or so in debt, but you are talking about $21.9 billion overall in equity, much of that made up of Charter shares. Just to put it in perspective here, Cox itself has been a company that's been around for over 120 years. One of the first cable companies in the country, 1962 is when they started in the business of cable itself. And it has long been potentially seen as a prize for any number of other public cable operators that might want to expand in that part of the country where it operates. 6 million customers, passes at least 12 million homes. And Charter prevails, in part because the time that apparently its CEO, Chris Winfrey, spent with the management team and the family as well, getting them comfortable with his strategy, with himself, with his leadership, and just gaining their confidence. The deal itself, I'm told, only took a couple of months to sort of work out. As for how it looks, let's give you some of the specifics. We're talking $4 billion in cash. $6 billion of a convert that will eventually become Charter shares, and then that 33.6 million shares. Also the $12 billion in debt. 3.9 times leverage, really not that much for this company. In fact, they do see themselves going down to between 3.5 and 4, but they've operated even at higher levels of leverage. Remember, it's been a John Malone-ish company. He likes to have some leverage in there. And what you get is sort of a combination in which the Cox entity's family will own 23% of the combined company. They will have governance rights. A few board members. Their current CEO will become chairman of the company as well. So maybe they didn't look for the highest bid. They didn't seem to get so-called control premium, but they are getting governance. And when it comes to premium or lack thereof, they're getting the same multiple that Charter currently trades at on its expected adjusted EBITDA for 2025. That's what gets you to this number. So it's sort of they call it a heads-up deal, basically. You get what we get, and that's how they got to it. Why now is a question I was asking of both sides, of course. Things are becoming even more dynamic. You have Starlink out there, for example, becoming a more important player certainly in rural areas, perhaps even in suburban America as well, and only going to grow in importance. You have increasingly importance of wireless, where Spectrum, the brand here, of course, has become very aggressive. You have AI coming, and software. So there's a lot of different things sort of knocking on the door, so to speak, and that seems to be one of the reasons why the Cox family chose now is the time, Sarah, to say, hey, good time for us to be part of a larger entity that can compete at scale. And interestingly, they will be significant shareholders. The Newhouse family continues to be a significant shareholder. And John Malone, whose Liberty Broadband is also merging in to the company, and this will all be done at the same time, essentially. That deal was announced back in November. Will also personally still control, I'm told 1% to 2%, but still an important shareholder as well.
Comcast shares a little bit higher. Just wondering maybe what they might do as a big competitor. This is our parent company, of course.
Yeah, it's unclear that there's much to do there at this point in terms of this deal. And on the regulatory front, this one would seem to be okay. It's domestic. It's going to add jobs in the U.S. Brian Roberts, well, Donald Trump,
he's been a target.
Yes,
of Trump lately.